is the Business Breakfast on the UAE's #1 talk radio station.
Dubai Eye 103.8.
Staying with the markets, let's talk property. Jean Jahinki's here, Chief Operating Officer of Property Monitor. Morning, Jean.
Morning.
Your latest report is hot off the press, and you say off-plan resales continue to grow. What's the key takeaway from your latest report?
So look, the market is great, right? It's improving. It's been going from strength to strength, and we've seen off-plan really start to boom. Right. And then what we're looking at now is we're seeing those instances of resales of off-plan continuing to grow month on month. Right? We've seen them go up to about 27, 28% now. That's a large chunk of that resale activity. So the big takeaway, the thing to look at for is there speculative activity in there? Is there intentional flipping? Is it someone buying something off-plan this month and then trying to turn it in the next 1, 2, 3, 4 months? And the short answer is, right now, no. These are properties that were bought some time ago. They're properties that are close to handover in the next 12 months. So it's activity right now that we're looking at that doesn't seem indicative of speculation. The thing to look for is if we start to see those, I'm buying now and I think I'm going to make an easy 10, 15, 20% in a couple of months. That's dangerous.
That's very 2007.
And we don't want to see it, right? So the percentage of them right now it's high, but not cause for concern because they're not those early stage flips.
So this is more opportunistic. I signed up for it 2.5 years ago. It's nearly ready. I've suddenly realised that I can sell it for quite a bit more than I paid for it. And so I'll pocket this. But it wasn't a strategy necessarily.
I don't think it was a strategy. I think most of these people have bought either for end use or they bought it as a rental property in mind. And now with the significant lack of ready properties in the villa and townhouse segment, and that's where we're seeing a lot of this activity, people are going, look, because there's such a shortage of supply in ready properties, someone's going to pick this up because it's going to be handed over in the next 6 to 12 months, and they're going to get an even better premium on it.
Let's look at property prices. You say Emirate-wide property values have just surpassed 1,100 dirhams per square foot. Now, that's an average. So obviously there's a wide range there. That's about 10% above this time last year. Drilling down into the numbers, what are you seeing?
Yeah. So again, that's an Emirate-wide number across all residential property types, hitting that arbitrary sort of 1,100 dirhams per square foot mark. The important thing to look at is overall price growth and the pace of price growth that we're seeing. So since the bottom of the market, or since the recovery, we're about up 30%, yet that's still 10% below the market peak of 2014. Right. And the pace at which that's been going, when the recovery first started, it was about 1.3% on average per month. Last year, it dropped to 0.9, and right now, this year, we're at 0.6. So we're seeing that price appreciation moderate, slow down, which is good, right? We want a long, drawn-out recovery. If we look at the last market cycle, the average price appreciation was about 1.6% per month. It was going fast, and there were some months where it was 3%, 3.5%. We're not seeing that now. So it's not a bubble that's quickly inflating. It's a market that's naturally appreciating now.
Are there any areas in Dubai where we're actually seeing prices come down? Because I know you and other analysts and experts have said that the affordable market hasn't had anything like the price boom that the luxury market has had over these past 2 years. What are you seeing?
Yeah, if we take out those tier one communities, so your marinas, Palm, everything else that's there, you've got some others that not necessarily coming down, they've just taken longer to appreciate. So your JVCs, Al Fajan, Ram, those didn't see as big a jumps. They haven't gone up 30%. They've gone up maybe 10, 15%, and their price appreciation is just slow. But so far, nowhere's really taken a hit down. There's some that have stagnated, and they actually are some of the more popular communities. So your Arabian ranches, some of the prime villa communities that you've got there. And they've stagnated just because they ballooned up so quickly. They grew where they should, but now there's just a bid-ask spread where buyers aren't really chasing those sellers' prices.
Let's talk about the off-plan market and what people are buying that's being released now, a new property stock that's going to be delivered in 2025.
So it runs the gamut. I mean, if you look at on a volume basis, heavily weighted towards apartments because they're much easier to build. You've had so much ultra luxury come on, right? You've had throw a few developers out here. Damac Bay Towers, right? You've got 3 towers that have gone there, selling out in 40 minutes, 50 minutes for a building. You've got Blue Waters Bay. You've got some of these prime ones that have been coming up. But then you've got some of the villa communities starting to really burst more. You've got you were talking about it last week, the stuff that's going to happen out in Expo. You've got out in District 11, Senses, the fields there. There's some older townhouse projects that have been reinvigorated and coming to market now, and they're selling out fast. And then the Valley by Emo. Palma. You've got launches there that are also selling out in a day or two. So it runs the gamut, but it's still heavily weighted towards apartments, about 70-75%, and then more to the upper market, higher market villa and townhouses.
Quick word on rents.
Well, they're not going up as fast, which is good. Yields are pretty much stagnant now, particularly in the villa and townhouse space. I think what you're going to see coming forward with rents is some downward pressure. There are a lot of handovers coming up, some big apartment projects where you're going to see several thousand units come to market over the next couple of months, couple of quarters. So Azizi Riviera is one where you've got a slew of buildings there, so that's going to put pressure on those areas. And then some of the townhouse communities as they come on. Right now you've got Ranches 3 where the first phases are handing over. Really high rents, but that's going to start to take some pressure off the other parts of the market as that buyer pool, that renter pool is taken out, where they're finding accommodation, less demand, more supply coming on.
Zan, great talking to you as ever. Appreciate your time. The voice of Zan Jahinki, COO of Property Monitor. Thanks for coming in this morning.
Thanks for having me.
It's the Business Breakfast, Dubai 103.8 FM.